Hello, guys, and welcome back. One of the coaches at Unger Academy here, and this is the usual chat that we have on the weekends to evaluate together the performance of the markets. Now, before we start, as always, I invite you to please go and subscribe to our channel, go and click on the notification bell, and please leave us a like to this video as well. We really appreciate it. Thanks so much. Hi, we are the Unger Academy, and we teach traders how to make money in the markets. Our founder, Andrea Unger, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks. Okay, so look, I'd say that it's been a pretty busy week in the markets. We see several large movements, for example, plus 21% in cotton or negative 5.7% in the NASDAQ. But let's go and proceed in order, and let's look at the stock indexes first. And as I said, the NASDAQ lost negative 5.72% over the last 5 days, with volatility at an all-time high. Now, I'm talking about short-term historical volatility now, and indeed we see that we're at the 100th percentile in the short term. As far as the long-term volatility is concerned, it is still pretty high, especially for the US indexes, which I suppose it's much lower for the European indexes at the moment. European indexes have had positive returns this week, unlike the US stock indexes. The mini SP 500 is losing about 3% right now. But let's move on to the bonds, where we see negative returns again this week. In particular, the T-bond, which is losing 1%. Also, we have a negative 0.68% on the 10-year bond, and the German Bund is also losing 1.51%. So the downward trend in bonds continues. And while we know that the Federal Reserve raised interest rates by another 0.75% as expected, and there's no sign that this rate hike will end in the short term. So it's a little bit of the driver that's pushing bonds and US stocks down. On the other hand, as far as the energy market is concerned, the whole sector has performed pretty well. In particular, we have positive 7.88% in gasoline. Look at natural gas. Yeah, that's up by 5%. Plus 3.7% for heating oil and a positive 5.13% for crude oil. We take a look at the most impressive gains in the energy sectors are definitely the ones that we are seeing in heating oil, which if we look at a slightly longer term time frame, it's above the recent highs. As for metals, we also see upward trends in the sector, which has definitely not been one of the best performers lately. However, this week we do have a positive 7% in silver, which make it almost exclusively today. Plus 6.89% in copper, and more modest returns for platinum and gold. Let's turn to livestocks. There's a decline in lean hogs of negative 3.68%. As for soft commodities, hey, here we can see some pretty high volatility. Let's take a look in particular at cotton, which just marked positive 21.5% this week. Also up strongly was sugar, and especially orange juice, which broke through all the highs and has been in the strong uptrend for quite some time now. Cocoa, that's also doing well at a positive 5%. So this was undoubtedly one of the most volatile markets this week. On the other hand, as far as grains are concerned, it certainly is worth noting the performance of bean oil, which has very interesting returns on both a 5-day and 1 month, as well as a 3-month and a 1-year view. Certainly is developing a strong uptrend and is back on track towards the highs that were reached in May. Let's move on to the currencies now. We have a euro dollar that is currently worth 0.9964. Yeah, there's been a slight decline compared to last week. Look at that. We also have a British pound that is down this week, negative 2.5%. And this is a setback because, as you remember, it was recovering, but then in the last 5 days, well, it's lost 2.5%, which is rather significant with regards to movement in currencies. Then finally, Bitcoin, which is up by 2.9% this week. So it is showing signs of revival, but as we know, it is still within the same trading range. And until it moves out of that price area, well, you can't say that downtrend has been broken. Finally, let's look at the volatility term structure measured using the volatility indexes for the SP 500. Here we can see a structure that is in contango, except for the short-term volatility, which is this white line, which isn't the lowest of all. And let me remind you that we talk about contango when the short-term volatility is lower than the long-term volatility. And this is the characteristic structure that stock markets have when there is no turbulence. So right now, we're in a relatively calm situation, even though the stock indexes have had a pretty volatile week. And if we take a look at the VIX, look at the current value of 24.04. It's in the lowest range of values that have been reached in the last 9 months. Okay, so let's turn to the rollover schedule for next week. We start on November 8th, when we'll have to roll over the cocoa futures. And on the 9th, we'll have to roll over the VIX futures. And then on the November 10th, the rollover on coffee. Well, guys, before we say goodbye, I'd just like to leave you with some advice. If there is anyone among you who is interested in systematic trading, I recommend that you go and click on the link in the description of this video. From there, it'll take you to a page where you can go and watch a free presentation by Andrea Unger, the only 4-time world trading champion in real money trading, by the way, who will introduce you to his trading method that is called the Unger Method. And from that same page, you can also get the bestseller, The Unger Method, covering only the shipping costs, or even book a free strategy consultation with one of our tutors. And that is it all for today, guys. Please don't forget to subscribe to our channel, click on the notification bell, and leave a like if, of course, you enjoyed the video. We wish you a very pleasant weekend ahead, and we'll see you soon next week. Bye-bye for now.